Monetary Policy on CNBC-TV18.
Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Ritu Singh. These are the top headlines from the startup space. In a bid to reorganize, SoftBank-backed hospitality company Oyo will lay off 600 executives across its technology and product teams as it shuts down projects and merges teams. I quote, Oyo will downsize 10% of its 3,700 employee base, which includes fresh hiring of 250 members in sales team, end of quote, the firm said in a statement.
Tech giant Amazon plans to lay off around 20,000 employees in the coming months. Reports say that the company will be handing out pink slips to employees from distribution centers and technology department. This move comes after the company went on a hiring spree during the pandemic.
Health and fitness platform Healthify.me has become the latest startup to trim its workforce, citing growth concerns. The firm has laid off 142 employees, or 7% of its 2,000-plus employees. The move has impacted 79 employees from the operations team and 63 from the core team. Healthify.me told CNBC-TV18 that it will be offering 2 months of salary as severance and will extend medical coverage until June 2023.
Consumer nutrition platform HealthCart raises $135 million in a funding round led by Temasek with participation from A91 Partners and Ankeet Capital. The firm will use funds towards the growth of in-house D2C brands, increase offline distribution, and expand international operations.
Airtel and Meta will jointly invest in global connectivity infrastructure and CPaaS-based new-age digital solutions to support growth of India's digital ecosystem. Airtel will partner with Meta and STC to extend 2 Africa Pearls to India.
Amazon and Apple are planning to resume advertising on Twitter, according to media reports. The developments follow an email sent by Twitter to advertising agencies offering advertisers incentives to increase their spending on the platform.
The New Zealand government will introduce a law that will require big online digital companies such as Google and Meta to pay New Zealand media companies for the local news content that appear on their feeds, Reuters reported. The legislation will be modelled on similar laws in Australia and Canada. Those are the headlines we are tracking for you this evening. Consumer nutrition platform HealthCart has raised $135 million in its Series H funding round, led by Temasek, with participation from A91 Partners and Ankeet Capital. The fresh funds raised will be deployed towards the growth of in-house D2C brands, increase offline distribution, expand international operations, and make select acquisitions. To elaborate on all of these plans, joining me now is HealthCart's founder and CEO, Sameer Maheshwari. Sameer, welcome to Startup Street. HealthCart started as a digital-first brand and has transitioned into an omni-channel business today. You operate in the nutritional segments of proteins, dietary supplements, and healthy foods. Take me through your offerings and the current business growth numbers that you're seeing.
Thanks for having me on the show, Shruti. Really excited to be here and really excited to share exciting news that we have raised fresh round of capital. So HealthCart is the largest nutrition platform of the country. We have 3 pillars of the business: brands, omni-channel distribution, and our R&D infrastructure. So we have a house of brands which cater to different use cases of nutrition. Sports nutrition is one of our largest categories, and Muscle Base, our brand in sports nutrition, has over 25% market share already. Similarly, we have a fast-growing vitamin brand called HK Vitals, where we have close to 20% online vitamin share. Similarly, we are going after additional use cases of nutrition, such as kids nutrition, healthy food, etc., etc. All this is supported with our omni-channel distribution platform. Not only we run healthcart.com, our D2C websites, but we also have 140-odd HealthCart physical stores, which are spread across more than 50 cities. In addition to this, our products are also available on other e-commerce platforms, quick commerce platforms, and over 30,000 grocery stores and chemists.
All right.
And finally...
Go ahead.
And finally, we have made tremendous amounts of investments in R&D infrastructure to be able to bring about the best innovative nutrition products to the market.
Sure.
So fundamentally, these are the 3 pillars, and the core segments that we operate in are sports nutrition, vitamins, healthy foods, and now in the kids segment.
All right, Sameer, we'll delve deeper into each of these things that you just mentioned. But for now, let's talk about the Series H fundraise. First, what is the current valuation of the company? And then if you could talk to me about your global expansion plans, what new markets are you eyeing?
So unfortunately, we don't talk about valuations, but I'm very excited to share about our expansion plans. So we have developed a proprietary technology in the sports nutrition called Biozyme. So we are very excited to bring about this technology and introduce this to the US market. And we are also looking at Southeast Asia market where we can replicate our success in the D2C format in these two markets. And once we have the foot in the door, then we'll love to introduce more products that we are developing in our R&D.
Okay. Sameer, you have plans to expand the health and supplement basket to new categories. What are these new categories going to be? And, like you mentioned, you plan to reach out to a new audience, that is kids. If you could elaborate more on these plans and the timelines.
Sure. So look, basically our idea is we built the base foundation for the platform. And now this platform is set up to quickly introduce brands and scale the brands to distribution. So the two active categories that we're working on is healthy foods. So we extended muscle-based offering into protein-fortified foods. So we offer products like protein shakes, protein bars, protein muesli, peanut butter, etc., etc. So this is work in progress. We have already expanded this quite a bit. Second category that we are excited about is the kids category. Right now, every kid, whether it is a 3-year-old or a 15-year-old grown-up, uses the same drink. We want to change that. So we have a personalized nutrition solution for kids called Kidzo, where we personalize the drink basis the kids' age, gender, and activity levels.
Okay.
And similarly, we are also going to be looking at other adjoining categories like women care, etc., etc.
All right. Okay. Let's talk about inorganic growth. Any acquisitions in the pipeline? Are you in talks with companies? And what space will you be looking at?
So absolutely, because we have set up this platform and now we will have the capital to evaluate inorganic opportunities. So while we are not in active conversations with companies, but we will be looking at companies who operate in adjoining areas. So somebody in the women care segment, for example, anything which can plug and play into our platform is something that we will be evaluating. And for next 2 years, I really see there's a tremendous amount of opportunity. There might be companies who have developed good product market fit and which can benefit from our platform to scale up.
All right, Sameer, wish you the very best with all your new offerings and expansion plans. Many thanks for joining us on the show today.
Thank you so much, Shruti.
Moving on. India's online places will record a combined gross merchandise value of over $350 billion by 2027. This according to a report by Bain & Company and Axel Partners. That's not all. The report also points out that these marketplaces in India have the potential to create 7 million jobs and serve 400 to 450 million online shoppers. Currently, online marketplace clock over $100 billion in GMV and also offer logistical and financial support to more than 6 million MSMEs. How are these marketplaces contributing to India's growth story and what is the potential? We are now joined by Ashutosh Sharma, Associate Partner at Bain & Company. Ashutosh, welcome to Startup Street. Currently, online marketplaces clock over $100 billion in GMV and is dominated by the likes of Amazon and Flipkart. Will this continue? Take us through the growth opportunity here.
Sure. And Shruti, thank you so much for having me on the show. I think, as you mentioned, the GMV clocked by a lot of these marketplaces is pretty large today. It's $100 billion in GMV. And if I break it down by segments, the largest segment is horizontal B2C e-commerce, the likes of Flipkart and Amazon, as you would imagine. But I think the interesting thing that we found as we were working on this report is a lot of the GMV, the remaining 50%, is contributed by multiple different segments. There's upstream B2B. There is fintech marketplaces as shipping and logistics, online food delivery, travel and mobility. And again, all of these together contribute to $100 billion plus. And if I think about the growth going up to 2027, we believe horizontal e-commerce players will still continue to comprise the largest segment and would account for 40% of the GMV. But some of the really interesting segments where we believe you'll see breakout growth, one is B2B. So we believe B2B could actually grow 5x in size compared to today and clock up to $50 billion plus in GMV. The other one would be online food delivery, which we expect to almost triple in size by 2027. And
Okay.
apart from that, I think fintech marketplaces, shipping, some of the other interesting segments should have a lot to do.
Okay. Ashutosh, the B2C e-commerce marketplaces are the single largest segment and contribute over $50 billion in GMV. B2C e-commerce, B2B e-commerce and online food delivery were among the highest funded marketplace sectors, together accounting for close to 60% of total funding received in the last 5 years. Will we see this trend continue? Where will we see most of the deals? If you could take me through the exciting sectors.
Absolutely, Shruti. And if I think about the more recent sectors which have seen a lot of funding, I think horizontal B2C has been probably the largest. But I think the one interesting metric to look at is deal volumes, for example, right? And a lot of the deal volumes towards, I would say, the last 1 to 2 years have been shifting towards some of the newer segments that I spoke about. B2B is a great example. If you think of the likes of, different players like Zetwork, Bizongo, Moglix, all of them have been actually seeing multiple rounds of funding over the last 12 to 18 months. Beyond that, there are, again, fintech marketplaces, both on the B2C side, but more interestingly on the B2B side, connecting MSMEs, which are underserved today with a lot of the lenders on the other side, are seeing a lot of investment. And I would say the third one is shipping logistics. Again, this is the likes of a Blackbird or a Porter, solving both intercity and intercity logistics issues, right?
Okay.
And they have been seeing a lot of funding. So I think I would say these are the three broad sectors, which are very exciting from a funding point of view.
Okay, Ashutosh, online marketplaces have created tremendous value for individual buyers, businesses, and the economy. These marketplaces have, in fact, offered greater access to capital, especially for India's underserved markets. If you could talk to me about how online marketplaces have especially helped MSMEs, how have these marketplaces boosted growth for India's underserved market?
No, absolutely. And I think there are three different ways, Shruti, in which marketplaces are helping MSMEs. The first one is potential sellers. So if you look at across different types of marketplaces, be it B2C or B2B, all of these marketplaces are providing MSMEs a platform to discover more buyers beyond their local or regions, right? Being able to sell these products to buyers pan-India, so allowing them pan-India reach, providing them support in terms of warehousing, packaging, logistics, any kind of support they need to reach these customers. And lastly, the most important point, which is, I would say, very relevant in the B2B space, is also providing them working capital financing or working capital support, which has been a big boost for a lot of these MSMEs to grow. Right? So there have been multiple different ways in which marketplaces, both B2C, B2B, have been enabling MSMEs, both as buyers on one side, as well as sellers of goods and services.
All right. One final question, Ashutosh. It's not only capital or growth, but online marketplaces have created many jobs as well. If you could take me through the kind of employment opportunity and the potential these marketplaces will bring.
Sure. I think in terms of the jobs, Shruti, the biggest impact has been seen in the gig economy, right? So if you think about all the delivery agents that are employed by, say, online food delivery players, or a lot of the B2C e-commerce players, or a lot of the livelihood provided to, say, truckers, for example, in the shipping logistics sectors, right? Or again, talking about a lot of the workers who help with the operations of large B2C e-commerce players like a Flipkart and Amazon. I think these are the various sectors which have been creating jobs. And the kind of jobs that online marketplaces will create will just continue to grow as we see this GMV rise from $100 to $350 billion. And therefore, believe that the number of jobs created will also continue to grow from maybe north of 3 million today to like 7 to 8 million jobs in the next 4 to 5 years.
Okay. Ashutosh, we've completely run out of time, but many thanks for your insights and many thanks for joining us on the show today.
Thank you so much.
All right, on that note, we'll move on where the Canadian coffee chain Tim Hortons is now on track to open 120 stores in India over a 36-month period. The chain is initially focusing on North India and later it will expand into other regions as well. On the sidelines of the Indian Congress restaurant, my colleague Aishwarya Anand caught up with Naveen Gurnani, who is the CEO of Tim Hortons India, to talk to him about the company's expansion plans and began by asking him what kind of footfall the brand has experienced since the opening of its first outlets in India in the month of August.
India has been on our mind for some time, but then obviously COVID delayed things a little bit. And we are here now, the soonest that we could get here. What's been validated is how welcoming the Indian customer has been to this brand. I mean, knock on wood, things have gone exceptionally well.
Correct.
We've been open for a little bit over 3 months now, and I don't know if you visited, but quite busy. I'm very pleased, very grateful.
All right. Now take us through your expansion plans. Now that you've already opened in Delhi and Chandigarh, which cities are you more planning to enter by the end of this year or by the end of by the end of 2023?
First 12 months, we'll stay in the northern belt. So Delhi, Punjab, many cities within Punjab. We'll soon be in Ludhiana and Amritsar and Jalandhar and Patiala and Batinda. But the next market that we are focusing on is the Western Indian market, which is Maharashtra, Gujarat, Goa, and that we expect to open the first few stores by June of 2023.
All right. Now, there has been an unprecedented increase in the number of coffee lovers in India, and along with that, we've also seen a lot of new chains coming up that are catering to the affordable range. So I want to understand, what is your target audience, and what is the average pricing at Tim Hortons for the Indian consumer?
So the positioning is what we recently coined this term, premium with friendly pricing. So as you go into the restaurants, it's a very premium feel, but it's easier on the wallet. I don't like to make comparisons, but it's easier on the wallet. And what we've also been very happy about is that it's the coffee and some of the iconic beverages, the French vanilla, the Java chip ice cap, the double latte. These are iconic Canadian Tim Hortons original favorites. They've been very well accepted. But also the food that we've designed, which has a global sort of feel to it, but has something for the Indian palate as well, has been extremely well received. With the result that our average ticket, again, without going into pricing or prices or numbers, our average ticket is significantly higher than you might be experiencing elsewhere.
All right. I also want to understand from you that the coffee chain market in India is expected to reach a size of $4.2 billion in the next 2 years, correct? What's the target for India in terms of, say for example, your growth or the revenues? Is there a target that you have set for yourself?
You're absolutely right. India, coffee consumption in India has been growing at a compounded rate of about 8 to 9% year after year. It's been going on for a decade. What we want to do is build 120 stores within the first 3 years of our operation. And we have been right on target.
Tim Hortons has recently partnered with Alibaba's grocery chain, that is Freshable. So I want to understand that in terms of India, is Tim Hortons planning to partner with some of the e-grocer players to start selling the products to consumers at their home, at their convenience?
Right now we are focused on building our brand in India with our brick and mortar presence. But we're already delivering.
With the cafe experience.
Cafe experience.
All right.
But we're already delivering.
Yeah.
So you can order through our partners, Zomato and Swiggy. And as I said, as things evolve, we want to be where our customers are. And so don't be surprised if you see us in the grocery store. No reason not to, right?
All right. Right now, the focus for Tim Hortons is to build a brand with a brick-and-mortar presence, says its India CEO. With that, let's head into a short break. On the other side, a special conversation with IAS Balamurugan, managing partner at Ankeet Capital, to understand the firm's third debt fund. Take a look.
Welcome back. You're watching Startup Street. Now, debt and equity investment firm Ankeet Capital recently received market regulator SEBI's nod for a 1,500 crore rupee debt fund to invest in startups. Now, this is Ankeet's third debt fund, which is called Grand Ankeet Fund 4, and includes a green shoe option of 500 crore rupees. It plans to launch the fund in the Jan to March quarter of 2023 and announce the first close in the same quarter as well. To talk about this fund and its investment plans, I have with me IAS Balamurugan, who is the managing partner at Ankeet Capital. Bala, thank you very much for your time and for joining us here on Startup Street. Now that you have SEBI's nod for this third debt fund that you plan to launch, Tell us what sort of opportunities you see for investment on the debt side and what sort of portfolio growth are you targeting?
Okay, great. So I think good evening, Ritu. Nice to have me on this show. So I think we just received it about a week back. I think this is our third debt fund offering from the platform. The first two funds, I think we had about close to about 1,300 crores both put together, and we had the ability to recycle, which means like we had recycled at least once. So we have already had exposure of about 2,500 crores in dealing with debt. If I have to take back the experience of Fund 1 and Fund 2, it has been predominantly on consumer companies. We had very little bit on the debt, consumer companies, pharma, formulation companies, and stuff like that. So I think, we don't feel any need to change that strategy. I'm sure, I think the time is good enough. Time is great for doing debt deals because I think there's not much of equity money coming in. The people who are starved for capital, and this is the right time to put a little bit of debt where people have raised a lot of equity. It can create additional runway, like it can create new businesses. It can help people to acquire businesses. I think we think it's a good time to be launching our third debt fund, and that's how we are. So I think.
Well, Bala, we'll get to the equity. Well, we'll get to the debt versus equity debate in just a bit. But first, you named some of the sectors that you're keen on investing in, consumer, pharma. But are there any others you've identified, and will they be from Ankeet's existing portfolio? Would you be looking at other companies, and what kind of average ticket size for investment are you looking at?
Okay, great. So I think we are sector agnostic. We don't do real estate, and we are open to do business with anyone other than real estate because that's how the mandate is. So I think more. I said consumer and pharma more as examples of it. Ticket sizes, I think we are good to go anywhere between 10 to 12 million. I think let me put it this way, like 7,500 crores, and maybe a stretch by under 10, 15 crores is what our ideal ticket size is. So that's that's what we are looking at. We are probably wanting to write about 10 to 15 to 20 deals in the fund in the next 2 years, and we have already have like 2-3 term sheets out, and we are hoping that I think once we launch the fund, which I think in the first week of Jan, we would have about at least like 1/3 of what we are aiming at to get closed in the first 3 months of our launch, and we will also have simultaneously like deployed also.
All right.
So that's what.
All right, so we'll see you sign the first deal very, very soon, within a month's time. But, back to that debate about venture debt capital versus equity. And, it's interesting because a lot of founders are now opting for debt because they have to dilute, less equity, valuations aren't the most attractive. There's a bit of a drought in the IPO market as well. Like you said, it provides some sort of a runway before they have to raise equity capital. But can debt really substitute the equity requirement for these startups?
Okay, so it can never ever substitute, that's for sure. But what it can do is that I think it can improve the runway. Obviously, like I think it can have a good capital mix. I think there's a good old saying of you build a business with a good capitalization of debt and equity, so that I think you are taking care of like your own shareholders' interest. Like I think, which is in this case, like not only founders' interest, also the investors, the equity share investors' interest. I just want to tell you one thing. Market always provide opportunities for debt. We always have events playing out. It could be COVID. It could be now, like I think the funding, so-called funding winter. It always keeps coming. So it's always a starved capital market in India. We have been in business for 7-8 years. We never had a time like where we said, I think we are out of business. Okay, so you're always in business. So I think maybe the situations change.
So debt is
here to stay for a long time.
Yeah, debt is always the flavor of this season. It is. Well, on the equity side, if you could give us an update about your opportunities fund, what is the corpus, and how much have you committed so far?
Okay, so I think what we are looking at there is about 500 crores, and we have a green shoe option of 250. We have close to about half of it has already raised. And we have committed on 5 deals, and probably 2 more commitments are being made in the next, like I think 30 days. We are doing the diligence on it. which means like I guess half the portfolio would have been constructed by Jan end. So opportunities fund, I think you would have figured out by now. The companies which we have dealt in the past, either in the debt portfolio or in our angel portfolio, where we have a track record of dealing with that businesses, also with those founders. But we are expecting, like I think, external investors to come and validate, and then we join them. Not necessarily we will lead in all those opportunities. Yeah.
Quickly, we've run out of time. You've had some great investments in the past, from Wow Momos to Bira, Sugar Cosmetics and whatnot. If I were to ask you in one word, what is the next big bet you're looking at making?
Next big, like I think, see every investment you think it's going to be big, okay. But I think I would like to bet on one thing, like which is, which is a good engineering services company out of Chennai. I think it could be the next big thing in our portfolio. I think that's, again, it's a very biased bet. Like I think having been out, it's more closer to the heart. I think that's how. But I think I would want everyone to succeed and everyone to be becoming big. And all our bets turned out to be big. I think you would know it. I think it's not going to be true. But I think I'm sure like we need to keep dreaming and on our bets. That's how it is.
Sure. Bala, on that note, it's been a pleasure chatting with you. But we've run out of time here on Startup Stories. Thank you very much for joining in. And on that note, I'm going to wrap up and thank all our viewers for being here. But stay with CNBC-TV18, the news continues.